All right. So when you go to your chart and you find your divergence and it could be in the past further back here because you're just doing it for test purposes to see how much you would have made if you found the divergence. And then you pick a, a candle, where you want to start at, and then you look to see where your last previous high is over here. So let's say we found it here, and I'm picking it pretty high because I want to show you kind of like how much you make off of a short distance on this chart. And so the price is, or I'm sorry, the date is 311, where I found that the where I found the divergence and the day that I found it. And then the um, the last previous high I'm marking at 280, 279, 280. Okay, so then I go to analyze and then think back, which is at the top here in the middle, and then a tab over right below it says think back. You type in Home Depot on the top left of the search bar, hit enter. You come over here to the date and you change this date, you hit the calendar and you change it to 311. Boom. That's going to give you the option calls for 311. And so what you want is you want to pick the one that gives you the most time, which is this one right here. Okay, so that one's going to give me 36 days. I scroll down to where my strike price is that I want to go to, which is where the low of my last previous high, which is the 279. I'm going to say 280. So right here, $3.80. That means I'm going to pay 380 bucks to get this option call. Okay? Does that make sense? Right. And so I click here, that brings up the chart down here, and then it automatically brings in this order thing here, which is a bunch of old orders, me messing around. All right, so I click it again. Now, just so you know, when you look at this chart, if I put my cursor right here on the left side and it says ask, you see that little box that pops up, it says buy? It doesn't matter which side you're on, you only ever want to buy first, okay? So I'm buying a call, you know, or I'm buying a put. If I think the stock, and don't do this starting out, but if you think that the stock is going to go down, you're buying a put. Over here, the ask is buy, and over this bid is sell. And then over here, it's the same thing. This ask is buy, and this bid is sell. You only ever want to do buy, because if you sell, there's a whole lot of risk involved with that. Starting out, because basically you're leveraging an account and saying, that, I mean, it's the opposite. So in this situation on ask, I stand to make an infinite amount of profit. But if I sold first, then I stand to lose an infinite amount of profit. So this side over here on the left is your calls. You see it right there. And this side over here on your right is your puts. Puts is down, calls is up. So for our purposes, we're only going to look at the left side. We're only going to find a strike price right here. This is the strike. This is the price that we said the last previous high was, which is 280. I slide over to the left. I'm at 380. Okay, so that means I paid $380 to get a option call of 100 shares. I click that, it brings up this green box right here. All right, and so now the only thing I do to this box is nothing, because when it pops up, it's going to say good till, and then it says day or good till close. And so if you're trying to get in on this option call, sometimes it helps if you change that. But for our purposes, if I was to buy this, I click it here, and then down here there's a box that says review, order, and send. I click that green box, and then it brings up an order total, and it says what I stand to win and what I stand to lose and how much it cost. And then I just hit send, the green box at the bottom of that. That's it. You're in it. Once the order fills, it'll send you a notification that your order is filled up here in the top left corner. And so that's it. So now Thank you. So now your order's in. It'll fill. If you did it at market, it'll automatically fill for you. You don't have to do anything. And so then what you do to test the next part of the theory to see what you have made is you change this date to the date that it closes on or till today or whatever. And so if I change this date to the 16th, which is today, this box is still up here, but now my strike price that I got in, I got to change this to all so I can see it. And I got to move this out of the way. Um, get that out of the way. There. All right, so we were at 280, right? This is the strike price at 280. You see? And this is still April 16th. It's the same box, it's just zero time left on it. And so if I had waited all the way up until today, which I probably wouldn't have, I would have sold it before then. But you slide over here and now you find the sell. And then you would click that. I mean, I would show you how to get rid of to do this automatically. But for your purposes to figure out what you would have made, right here, 47.90, if you sold this option call at 47.90, you would have made $4,790. Are you with me? So do you see how profitable this could be? Well, yeah, yeah. I'm just Yep, yep. And so yeah, exactly. So yeah, everything I just showed you after the point of finding divergence and everything, I just kind of went through a crash course to show you how you would back test it, which is explained in the video. And so you can watch that and it'll show you over and over again. And you'll have this video because it's going to show you over and over again. And so but the main thing is I want you to see the point, like of how you test it and why you would test it to see if you're right. But if you find divergence on Home Depot and then you mark the day that let's say you theoretically find it, and then you go and change it up here in this box under the analyze, think back, change the date here to that date, it's going to give you the option box of that day as if you were there that day. Does that make sense? So it's like, oh yeah, yeah. I mean, you'll have the videos. You'll be fine. You'll have it'll literally show you step by step. It'll literally go up to each one and show you with the cursor where it's at, and then show you where the next one is um, in the video. And so the main thing is it's giving you a way to test to see if you're right, and you know, so that way you can show, you can actually see whether or not you can actually do this. You know, exactly. And you don't have to hit this on demand button to do this. Yeah, it did all this right here in regular time because it does it in the think back. So you just go to analyze, hit think back. Now, if you actually want to place the orders and let the time run and see if you're right and actually play it like that, you can, but it's not needed. You just need to see whether or not you're right. That's it. Yeah, No, you're fine. The main thing is just divergence. And if you want, just Google or go to YouTube and type in divergence, chart divergence. And you can watch umpteen thousand videos of divergence until you're sick to your stomach of watching divergence. And you'll get a very good understanding of every type of divergence there is ever. Um, but really, all it is just looking for a difference in a trend line. And all a trend line is just taking the lows of whatever it is I'm looking at and drawing a line. Or I'm taking the highs of whatever I'm looking at and drawing a line. And then I'm comparing it to the highs of whatever I'm looking at below on the indicator of the same thing. I'm looking at the highs in the same area and then or I'm looking at the lows in the same area. And in this situation, you only need to look for divergence on the low end. You don't need to look for it on the top end because we're not playing puts trying to go down. We're looking for it down here to go up because it doesn't cost, there's no infinite amount of like loss doing calls. You can do calls and it doesn't cost you anything other than the money that you put forward. Perfect. Perfect. And so, I mean, like I said, this this right here is all you need. This is all you need. If you understand this, you can make money in the market. This is it. Exactly. 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 Look at this. So, yeah, I didn't mean to cut you off. I'm sorry. Go ahead. Um, Once you get comfortable doing that, then there's plays like this where this is Amazon and this is going to cost you a lot more money to play, but the reward on it is a tremendous amount more too as well. And so whenever it does this long wick down like this and it comes up and it stops before it hits the Bollinger Band right here, see this is the Bollinger Band. Normally whenever price action pierces this, it comes down and hits the Bollinger Band again, you know, it touches it again. But that's a very bullish move when it doesn't touch it. See, even here it didn't touch it and it goes up. And here it just barely touches it, but it still goes up. But it's after it didn't touch it and came up here and hit this and then came down and touched. So this move right here, when it comes down from the top and hits the bottom, it goes through the bottom Bollinger Band, comes back up, it typically hits one more time before it goes up. But when it doesn't do that, that's a very bullish move. And that means that that's a very strong move to the upside. It's like it's like that kid that can't wait to use the bathroom. That's like, teacher, I gotta go. And the teacher's like, you can wait until lunch and then he pees his pants. It's like that. This guy can't wait. He's gonna go. But like, wait, no, he's gone already. He's already gone. you know? So that's what this is right here is when you see this move right here and you have this long wick and then it puts another one with a long wick after it and it's already